it for this session. In many of the conversations that we have at EY, I think AI is an oft repeated word. I myself work in financial services, and the extent to which financial services is adapting, and benefiting from the use of AI, given the amount of data that gets collected in financial services, as everything that we do gets sort of recorded with our financial services provider. I think most importantly, for many of us in this room who are probably existing to credit, and I'm going to the credit side or the lending side of things, people who are existing to credit and have a bureau footprint probably find it easier to get a loan. But think about somebody who's just coming into the ecosystem, somebody who's just taken on their first job, somebody who's just started their self-employed journey, and the way and the amount of hoops they have to go through to get themselves any kind of financial assistance, right? Or I wouldn't really call it a loan, various other things. So I think the important part of AI and making the use of data and making it really important and a very important piece of conversation today is our ability to be able to use AI and data in the world of financial inclusion, improving access to credit, and all of those areas. And that's sort of what we'll focus upon today. Thank you very much, all of you. This is a great panel. I think each one of us brings a lot of gray hair to the panel, and many of you don't have gray hair. Sorry about that, but we make up. The rest of us make up for you. So thank you very much for joining me today, and I'm sure we're in for a really enriching discussion. Thank you, all the audience members, for listening to us. If we bore you, just put your hand up and say, just let's move on. We know all of this. So thanks, everyone, and welcome to all my fellow panelists. So I'll start with Nitendra. Nitendra, you at Mastercard, we would love to hear some real use cases, right, as to how we've used the data that you collect at Mastercard to be able to land some real use cases for, say, new to credit, thin on credit, that particular segment, and whatever else you would like to probably enlighten us on.
Absolutely, sure. And thanks, Nimilita, for setting the context. It is interesting if we use the term AI in the finance world, especially when the world is moving towards digital finance. And as Nimilita was saying, that we leave a digital footprint of what we do in this world, and that is what helps us collect large amounts of data about specific customers. And it's not very surprising, to be honest. I mean, forget AI, look at us using, our own brains, right? I mean, we can see that in this room, none of us look the same, right? Everyone looks different. And similarly, every one of us who reached here in this room came through a different route. None of us actually came at the same time, following exactly the same route and so on. So now, the same thing happens if you look at the financial background of all of us. All of us have traversed a different trajectory, a different path, which is unique only to us. Which is where actually AI helps, because AI does not build rules that everyone who is X feet high, Z weight, and so on should get this kind of credit, should not get that kind of credit. If that's the case, that's when we start to paint things with a thicker brush. What AI can do is that it can personalize, it can look at your history, and then it can actually figure out what decision needs to be made for this specific person in this situation, which, as we see, all of us are unique. But coming back to your question, what you said is that what if there is no footprint? The person just landed here and I don't have their background in some sense. What do you do to those? In the world of AI, so now most of the standard problems in AI have been solved. So in the world of AI, this is a very interesting problem that you do not have a strong in the finance world, a digital footprint of a particular person, and you have to take a decision whether it is related to credit or whatever. The AI world looks at it from a point of view of what is called as zero-shot learning, which means with how less data of a person can you actually understand what could their trajectory would have been and therefore make a particular decision. So we at Mastercard, what we do is that we use such techniques to figure out whenever a new card comes to us, there are additional information available to us about that particular card. As soon as a card starts making transactions, which is the first merchant to which you make transaction, what is the location where you make transactions and so on. And then go back in the past and see what are the other cards whose first transactions were like this, and that's why we can figure out how their future would look like in some sense. So a lot of work at Mastercard used to be about, specifically in the risk domain, about when you swipe your card, is this transaction a fraudulent transaction or not, and so on. So making on-the-spot decisions. Now we have some real-world use cases where we use our AI-based algorithms in products. Specifically, one of the products is account intelligence, which looks at an account, which means a card, and tries and figure out what all can happen for this account in the future. Is this card going to go and use a lot of contactless stuff? Is it card going to do a lot of chargebacks and so on and so forth in the future, looking at the past behavior of other cards in that particular similar scenario? So all of those things, both from a technology perspective, from a core AI perspective, irrespective of fintech, within the fintech domain, trying to understand and learn from other cards, a short duration of theirs, and trying to predict how their future has been for the cards that have been there for a while, and then trying to figure out that when a new card comes in, use least amount of information and try and figure out what the future is going to be. So all of these things are in some sense merging to help make decisions using AI for cards which are not even, for which we've not seen enough actually. Yeah.
Thanks, Nitendra. That was really insightful, and probably, at least as an analytics professional, I heard a few words that really resonate. Number one is you're getting to a segment of one, which has really been what we've always wanted to do. And I think the other thing being the fact that the look-alike, right, the whole look-alike modeling area, which is something that probably we use a lot of, but maybe don't talk about it that often. So, Akshay, coming to you, I think in the same vein, you in business have practiced a lot of, lending to the early in somebody's, in an individual's life. And you're probably seeing a lot of such real use cases coming to life. So we'd love to hear from you some of the problems that you have solved or how you've used various sources of data to create, this whole segment and build so beautifully this segment.
I would look at, if you look at a young person, right, there is little data about him. Maybe he's 22 to 26. He's not exposed to too many credit instruments, and typically you're expected to lend on, let's say, looking at bank statement or bureau data. Now that makes it very difficult for lenders to take a hard call whether that person is good or not. The second part is you need to grow to build algorithms which can run in real time and decision at mass scale. Now, as you're building a business, you have to differentiate yourselves, and we said, what more can happen? At one side, data is getting restricted. You need to make sure that you work within the realms of PII data. You work within what is constructed well for banks and NBFCs to run businesses. At the same time, you're disrupting the technology to say there is a newer way of underwriting a different segment. Now, we added two new variables to our decisioning science. One was sound, and second was visual recognition. Now, most people will capture a picture. We said, let's go beyond the photo, let's go to a video, let's go to ambient visuals and say, can we build a sentiment not just at the time of origination, but whether the person is placed where, does it have more variables coming out of it for decisioning. The second we noticed was large number of people have to be spoken to, which means voice and voice modulation can also become another indicator of risk. When you marry these back, what is the large output you could detect? Today, let's say at a proximity level, we are able to get 3 times higher efficiency in predicting churn, repeat rates, cross-sell rates, delinquency, and propensity to upgrade to a consumer hearing his voice. Now that changes the way you build a company, right? You move from saying, I have a few data points versus I'm building proprietary data, which is going to be very different. I'm now working beyond regression analysis to actually use AI in my decisioning. And I'm moving from a one-time lending instrument to a perpetual lending product, which means I can now grow with the consumer. Today, as a company, we don't lose our customers to traditional institutions. We make sure that our consumers stay continuously with us. And that is because we are hearing to him. We understand his life cycle. We are able to upgrade him from one product to another product to another product. And that is a intelligent science getting built in because of additional variables built in runtime as the customer grows along with him.
Great. I think that's, it's almost eye-opening for at least many of us in this room to know that so many other variables get, so many other sources of data get added in to create models, and the results are pretty fantastic, Akshay, honestly. We've all heard about the power of non-traditional data, but I think you've really brought it to life at Early Salary, so that's amazing. So I think I'll go from one end of the spectrum to Nanaiah, being really, running a bureau, having really the quote-unquote traditional data source, the very powerful traditional data source for thick customers specifically. But I think the question is that how do you use bureau data along with other sources of data to bring financial inclusion, new to credit, thin on credit? How are things like that working? We'd love to hear from you.
Thanks, Nimi. Bureau is a classic example of, textbook example of a big data and analytics, right? Our ability to leverage data to solve for use cases in the market is phenomenal. The journey that we have done in the country so far to build a very healthy growth of credit is running at the back end of bureaus like us. There are two classic cases in the lending landscape, right? One is existing to credit, and another one is new to credit. Now, in existing to credit, a lot more data is available in the bureau, so we are able to predict the potential default rates effectively well, and we strongly believe use of AI, more importantly, use of explainable AI, right, will enhance the power of this predictability. When I say explainable AI is that if you reject somebody's application for a loan, telling him the reason why it has got rejected is phenomenal, right? At the moment, nobody gets to know why an application for a loan got rejected. Now, by use of explainable AI, if you're able to tell the consumer your loan application is rejected for the following 5 reasons or following 2 reasons, it gives an opportunity for that individual to work on their credit history, improve the credit score, and be able to access credit back. So, extremely powerful in Equifax. The neural decisioning technology for the credit decisioning has been patented, wherein you're able to potentially give back a reason as to why a particular application has been rejected. This is truly financial inclusion, right? In terms of how do you help enable access to credit for those who need the credit, right? Those who get rejected because of lack of credit history or lack of good credit history is very, very important. So that's where I think we see the AI, the ML layer running on top of our database to be able to help lenders make those effective decisions. At the bottom line, Akshay keeps telling, lending is a very simple business to be in. It's a very simple business, but the complex process runs beneath the entire decisioning journey to ensure that they don't lose money and they make money. That's very, very important. So risk has to be contained. And while we contain the risk, I think how do you ensure that the borrowers also are able to access capital on a regular basis? So that's on the existing to credit, how explainable AI can be very effectively used. On the new to credit is that use some of the non-traditional, Nimi said bureaus are a traditional data, and she went on to expand it a little better to say that very strong data, but that's good. But there is a way we can bring the non-traditional data with the traditional data to make sense out of the non-traditional data to do the underwriting decisions. See, the point that Nimi mentioned is about mirroring, right? So whether you could look at non-traditional data like usage of telecom services or rental payments or whatever that data that is available out in the market for those borrowers who don't have any presence in the bureau. When I say no presence in the bureau, they are first-time borrowers. So how do you bring in that set of data, mirror it with the data in the bureau to see how they were to, if they were to borrow, how will they behave in the marketplace, right? So those are all the values that we could bring to the table for all the lenders in the country. I think, with the data that we have in the bureau to solve for existing to credit, solve for new to credit, enable access to credit, and also there is a large use case, I don't know whether we have time to discuss on that. How do you potentially use AI to predict fraud risks in the marketplace, which is another, there are only two risks. When Akshay defines business as so simple, there's credit risk and fraud risk. I think we can use data and AI and ML very, very effectively to protect lenders from some of these risks.
Sure. And I think that's very nicely put to say that how can traditional data sources be brought together with alternative data sources. And the line is getting blurry between what is traditional and what is alternative slowly and steadily. And alternative data sources are really changing from customer segment to customer segment. So I think that's sort of the bottom line. That's where the magic happens, where you bring together different sources of data, bring it together for the right set of customers, and that probably works, the entire micro segmentation and hyper personalization. And sorry, I'm a consultant, I have to use all the jargon that is in the market right now, otherwise you'll go back from here thinking I didn't add any value to the discussion. So that's sort of what, so Sucheta, that brings me to you in terms of, again, I think similar to what Akshay said. We'd love to hear from you how you're using, these data sources. How are you using AI to really land better risk in fraud, in credit? How are you using it in real life?
Yeah, I think, thanks Nimi. We've spoken a little bit about making more sort of, what does this really mean, right? Like, what are the real examples? What does this really mean? And Nanaiah spoke a little bit about financial inclusion. So here's where the rubber hits the road, right? We have a really, really ridiculously large portion of our population that even today remains either new to credit or frankly doesn't have the kind of access it needs to formal sources of credit. That's where I think AI or these machine learning models that we are all sort of talking about right now are making the difference. We are suddenly able to offer a loan to a customer, to a woman in rural India who is either very thin file on a bureau or just doesn't have bureau presence, right? Banked for sure, but they do not have the access that they need to start that tailoring business, to start that first small entrepreneurial venture, right? We spoke about the youth. Most large institutions haven't yet figured out how to economically underwrite, for example, youth, right? I mean, there's ways to underwrite, it just doesn't work out, and that segment remains sort of underserved. And we have many, many such segments in India. That's where I think these machine learning models, this new analytics is really, really game-changing. Via this information that we're able to process real time, process very, very efficiently, and process very economically, I must add. We are able to offer financial services, in this case credit, to people when they need it instantly and make it, we are adding dignity and respect in their lives. To many of these segments, the business of standing in the bank and then, probably not getting served the right way was very, very demeaning, right? Here, on their own smartphone, they go, with a few clicks, they get access to credit just when they need it. Now this is so game-changing, it's not funny. I have example after example where someone's managed to pay a medical bill just in time, it saved someone in the family, where someone started a small business, all they needed was 12,000 rupees to make those early sort of raw material investments. So I think these are the ways in which it is very, very real, and personally I find it very fulfilling to be able to be part of the customer's life and journey in this way.
I think that's, it's humbling in some form, and it's also eye-opening in some form that all of us together, probably, this larger forum and the segment that we're all trying to address is so much larger than what this room or the people who come here are. And I think that's really where the data and the AI and all of that starts to make a difference. So thank you very much for that.
And also just see the social side of it, right? You're helping build credit history
Somebody's, yes.
for those who never had a credit history. I think that's a phenomenal work.
Yeah, absolutely.
I'm making note that Nanaiah is asking us to report back on time and not mess around. Yes, that's noted.
Yes, each one interprets what they want to interpret. Yes. So, Pat, coming to you, in terms of the fact that, I think the elephant in the room or the question on everybody's mind is on data privacy. How do you use this data? What is right? What is wrong? What is gray? What really is consent? All of these kind of things, especially in this segment of customers, right? And having your exposure in the UK and, where GDPR norms, etc., are so strong, what would, some of your experiences on how data privacy is impacting the space, or what all of us need to think about as we use various sources of data?
Sure. I think there's been some great comments so far, and I think just to kind of build on this, it's one thing getting loans and getting credit is one element, but it's that responsible element, and I think there needs to be some consideration around that, because just because you want a loan doesn't mean you should have a loan. So I think there needs to be some of this, and in the UK there's been lots of examples of payday lending years gone back, the Wongas of this world. Then it's been reincarnated into the buy now, pay later space, and you've seen a lot of debts rise. So there is a responsibility element, and maybe AI can play a role in that as well, the propensity to actually pay back that money. And so there's something there I think needs to be dug into. But I think around the data privacy and protection, and we had that conversation about an hour ago, and I said, is this a loaded question? For me, it feels that AI models need to bake in data privacy and protection. That seems to be a given. And a lot of it boils down to the company's values that's building those AI models. And so how are they going about this? What are the values that they have? What do they stand for? Otherwise, you can get a lot of bias that comes into some of these models. I think more broadly, when you think about, say, the Web 2 space, and you think, Web 2 come around when mobile, social, and cloud all kind of come together. And similarly for Web 3, everyone's talking about crypto and blockchain and decentralization, but they're missing two fundamental pillars as part of the decentralization space, and that is the AI element of that and the quantum computing, which enables more processing power. So these three in combination should build this new Web3 world. And if you subscribe to that, then you own your own data. So you're responsible for sharing that data, monetizing that data, and it's a paradigm shift away from the Web 2 models in which you could use services largely free, and these companies would monetize your data and make a killing out of that and advertise to you off the back of that. So I think this new space that we're kind of in the early stages of, we're probably closer to a Web 2.5 world. I think that whole data protection and privacy should be down onto the consumer, and you own your own data, you decide what you want to do with it, and no organization should be able to have your data for free. And then when you start to think along those lines, it may change business models as we know it today. So you can kind of dig into that if you want to.
I think super interesting, again, the product is you, right? Each of us is a product of ourselves, and you own your own data. You can probably monetize your own data for your own benefit, as it may be, right? Whether it may be discounts or whatever that may be. So I think that's amazing to sort of bring this whole discussion together. I think we've heard multiple views. We've also heard multiple facets of using data, and as we sort of come to the closing end of this conversation, I'd like to just go around the table to understand from each one of you in terms of what is that one thing that all of you that you are watching out for going forward, right? In the space of AI, analytics, use of data. Just one thing, privacy was one thing that came to our mind, but is there one thing that you're watching out for as we look at exploration of all of this data? So we'll start with you, Nitendra.
Thanks, and I will say two things, not one. I think from a finance perspective, there are two things that are really important, and there are surveys that have said, what is it that makes sure that your customer sticks to you? One is ease of use, convenience. Sucheta mentioned that you have to have real-time decisions and so on. And the second is actually trust. As soon as you lose trust, and that's why perhaps Nani was mentioning about explainability and data privacy and so on. So those are the two really important things, and that's what we've also realized while working at Mastercard, like having the ability to process like 1,000 transactions per second because there is a real-time requirement. People are waiting and making important payments which need to be processed right then and there. You cannot deny a transaction which is supposedly supposed to go in some sense, but at the same time you need to worry about fraud. So how do you make those quick but really important decisions so that the convenience is still there for the customers? And while AI is being talked about from a responsibility, ethical AI and blah blah perspective, but as soon as it is being applied to the finance industry is most watchful about it being trustable by its customer, because that's what keeps the businesses going in our world, and that's why I think these are the two main important parts for us.
Great. Sucheta?
We're talking about the models and AI, right? I think our models have really, really become great. They have learned, they have become very, very powerful. That said, I think we need to be careful. Pat referred to privacy and so on. I think we need to be careful what we input. The regulator does not want us to ever get into a space of discriminatory practices. So we have to be careful what we feed into this model, lest it come to a place where we are intentionally or unintentionally discriminating, right? And I think that's a big sort of moral responsibility for all of us, right? As these models mature, we have to keep an eye out to make sure none of that happens. That's usually the regulators' sort of big advice to us, and I think it's our obligation to keep doing that. Also, I think when the model gives us a bunch of outputs, what often we miss doing is applying just business judgment and the smell test to some of the stuff that comes out of this model, right? And then we try to step back and make the models even finer, where some degree of deep customer understanding, some degree of business judgment, and a simple smell test would have told us, okay, boss, this won't work, right? Just go back and rebuild this part of the model again, or like junk this. So I think that is something I obsess about never forgetting. Both of these things, I think I obsess a little bit about never forgetting. So those are two things I would, watch out for.
Akshay?
So, I think for me, the most interesting things is coming from a very simple perspective. Our analysis shows need for money goes up between 21 to 29, and affordability of money comes down post 29 to 40, right? Once you're 35, you can afford buying an iPhone because I earn enough, I can pay it in monthly mode. But when I'm 26, I want the iPhone, but I may not be able to afford it. So that's the difference. And I think that particular perspective will only get answered if the analysis capability on data available can be done in a more rational manner at a more frugal cost. Right? Many of the time we don't realize that the amount of data into churn at a customer level is phenomenally large. And models like ours only make money if we keep the cost low. Right? I think the disruption now taking place is computing power is really going up. Right? There is more data available sheerly because you have now decisioned millions of people. Now when you build a model for very young people using previous analysis, you can actually bring out capability of, let's say, giving a 24-year-old a capability to buy an iPhone on his own. And when you build that power, you build a much larger consumption economy coming in. India is on the verge of building consumption. When you add these 3-4 parts which I spoke about, computing power, understanding consumer behavior, availability of data, you actually bring the beginning of consumerism. And once that happens, you have actually, let's say, 20 crore more Indians where access to credit can open up in the next 18 months. If these 4 parts add up, the industry will actually grow by 5 times, not by 10%. Right? That's the changeover. And I think that's what's going to keep us hungry and more willing to invest in efforts to build out larger enterprise.
And what keeps you up at night is how you're going to be able to scale to meet all those. Great. Thanks. That's the problem of plenty is also a problem, but good to have. Yes. Yes, Nanaiah.
So I think just building on from a bureau standpoint, our ability to solve for, again, access to capital, the credit penetration, how it can improve in the country, I think it's phenomenal with the data that we have. And with the overlying AI capabilities, I think we can solve for things even better than what we are solving today. To the point that I mentioned, I think explainable AI is very critical to success. To tell somebody why his loan has been rejected, I think it's, must be feeling so bad that his loan got rejected and not knowing why it has got rejected, right? If you're able to tell them, I think that's phenomenal. That's the next wave that I see. Second thing is, while we talk about all the benefits of AI, responsible use of AI is also very, very important, because to Sucheta's point, that if AI, if it is not built in a constrained model, it can throw up biases in the decisioning, which could impact access to capital. So very responsible use of AI is also very, very important. So there's a lot of debate between constrained model, non-constrained model building methodology, whereas constrained model is considered to be very responsible. Non-constrained can throw up biases from an output standpoint. I think while AI has real benefits, I think responsible use of AI is also very important.
Absolutely. And Pat, to you.
Sure. So I think for me, and I think this is influenced by 2 young kids, that you start to think about something beyond what you do and how you make money. And I think it's around sustainability. And so one of the big things the world is facing right now is a reliance on proxy data. And so this proxy data is not accurate, and companies are building, their net zero or their tracking based on this data. And I think if we can leverage AI and elements of big data, I think particularly big data, we can move as a society, as a world, beyond fake data to something which we can actually, the real world data that we can use to track, trace, monitor, and see how we do better. So it's ultimately leveraging AI and big data to achieve not just net zero, but net negative. And I think that's probably one of the biggest things that we can do in leveraging AI and big data.
Absolutely. And I think some really, really amazing thoughts. I think the last round was really, it brought out everybody's, I think, the side that all of us probably think about but don't talk about that often, which is about having responsibility as you grow. How do you think about growth, but you grow at the right costs, and how are you able to churn and use data to analytics at the right cost and price. And I think very, very well said. I think the closing comments from Pat in terms of saying that what are we leaving behind for the world? How can we make this a better place using all the tools at our disposal as well, right? So I think that the whole sustainability piece is something that we can definitely use. So having said that, I think super discussion and really eye-opening. Thank you very, very much, each one of you, and thank you the audience for listening to us. And we hope to see you soon at this event again next year. Thank you.
So thank you, gentlemen and the ladies on the panel for that interesting session. Some points that really made a lot of sense, what Nitendra spoke about, how trust and how AI can be used to build customer stickiness, which is so essential to future growth. Akshay spoke about how they are using voice in order to decipher probable financial behavior, which is a pretty interesting thought. Nanaiah brought out the fact that explainable AI is key to the future growth of the industry, and how it is financial inclusion to the true sense, and that AI also needs to be responsible. Sucheta spoke about how there is still an underserved section in the space, and how we can add dignity and respect to the process, which is a fulfilling experience in many ways. And lastly, Pat brought out the fact that the emergence of Web3 may actually significantly change the way we do business in this space, and the reliance on proxy data and being quite not being quite accurate was a point of concern, and how we can use AI to track, trace, monitor, and do things better in this space. So really interesting points coming out of the panel. If there are any questions that you want to address to the panel, we are open for at least 2 of them now. Yes.
Hi guys, my name is Deepak. I am a lead data scientist at a fintech startup. So, we work in the rural sector, and, one of our main pain points that we have been trying to address is how to use AI and big data for collections, right? We are always trying to close that gap into like, okay, we expect these many delinquencies, these many NPAs, and trying to close that gap of expected versus actual on one end, right? But on the other end, we are also trying to optimize for the collections practices to make sure, we are able to sort of, approach the people and use marketing tactics or communication tactics to be able to, target the people who have high propensity to pay, right? So how do we, so for the latter part, I think we sort of missed that in the discussion. So just wanted to know your thoughts on how can we, leverage AI and
Maybe I'll
big
talk
data
about
for
real
that.
life situations actually. We do this quite efficiently. The collection scorecards are fairly robust today and available. I think 3 or 4 rules come into building these. One is, remember, in many other fintech models, it's not first time loan, it's repeat loans and repeat EMI payments which have to come in. Right? In a traditional man, you cannot man every response of every customer. But in a digitized world, you can, every record of every response can be measured. For example, there is a propensity of a customer to pay late. But did he react on the first SMS? Did he react on the first notification? Did he react on the first voice call? Did he react on the 7th voice call? Did you have a differentiated person calling to have a response? And when you measure that back, today, one of the clear principles that we follow is how do we reduce at least our calling by 10% every quarter on collections, right? That's only going to happen first by measuring the data, building propensity scorecards on it. And as I mentioned, we are hearing the voice of the customer to say, will he pay or not pay? Right? You cannot have an intelligent person making a recovery call. You can have a caller making a call. The intelligence comes by the AI scorecard which is on the back, which hears and converts to NLP and says, this guy is not going to pay. Stop wasting your time. Right? Because you can only push a customer to a level. Right? Beyond it, the efficiency goes away. That's the intelligence which is actually now getting powered. And let's say we are responsible for at least 500,000 EMI payments a month. Right? And our job is to make sure we collect 99.4% of the money every month. Right? Now that's the efficiency. It comes in because of the collection scorecard, because of the NLP running behind it, because of the sheer measuring and tracking of every tool responsible for connecting with the consumer.
If you don't want to build one scorecard, come to the bureaus, we'll have the scores ready. Yeah.
We have time for another question, please. Thanks. Yeah. Oh, yeah.
I'm Harshit. Thank you very much for this panel. I have a question. I've seen that in most projects that are implemented in banks or financial institutions, while everyone realizes big data and the importance of data, but the one area that receives minimum attention is the quality of the historical data and the data migration. Because by that time, I think there's such a lot of fatigue and everyone has sort of passed the deadline that they say, whatever data is there, let's go with it. And then to apply business models and AI and big data techniques on bad, outdated data, I don't really see the point. So I want to know your thoughts and views on it.
I think you referred to, yeah.
Maybe I can add before he jumps on one part. See, because the new age industries are learning faster, right? Let's say 5 years, when we started this business 7 years back, we were told a scorecard takes 3 years to train, 18 months to build, 7 years average scorecard should last. We try to destroy our scorecard every 6 months. Right? That's a tough, bold move, right? But that's the industry changing too. So you're going to rely on old data, it's good for 6 months, something fresh has to get built after that.
Yeah, I mean, you're right that it is a lot of information is available in recent data than in the past data. But in the finance world is one thing that is also very important, which is rare events. COVID was like a very rare event, right? The wars are usually rare events. Now, if you do not use that historic data, you would miss out on how the market, how the customers react on such rare events, for which it is really important to have, and which is why institutions, companies having a significantly large historical data set would be helpful. But of course, you're right that for specific things, perhaps the recent data has more value. And there are algorithms from an AI perspective which look at, which weigh in recent data more and weigh in the more historic data less. But I don't think it's perhaps the right idea to just ignore the entire past data. Yeah.
I think the point you're trying to make is that we probably should not be ignoring. I think spot on. What happens, you've probably experienced it, that's why you have the question. What the organizational fatigue on when projects of this scale are done, there's an element of fatigue. We've probably tried it once, twice, multiple times. It's probably gone through some pass fail, and some like failed sort of stillbirth problems already, right? There's that problem. Also, I think the understanding of the ROI on the benefit of doing this was not very apparent before, which is now getting more and more clear, right? The pricelessness of the data and the ROI of taking the trouble of, for example, migrating larger data sets than, versus just going with latest data. I think that understanding is now becoming clearer and clearer, a little bit because the world's evolved, a little bit because others have demonstrated and so on. So hopefully this becomes more of a trend. But you're right that historically this has been a challenge, and it's not been done very elegantly till date. Yeah.
So with that, we bring this session to the close. Thank you so much for doing this with us. Take care of yourselves and wish you well. Thank you. Thank you.
Thanks, Nimilita.
Thank you.